is Mr. Not Advice. It is Wednesday, July 1st, 2026. As always, this is for education and entertainment purposes only. And we're going to go over just some basic rules, and then I'm going to go straight into charting, and then we'll do a question and answer. But I wanted to give you an idea how I choose levels, and then when I have multiple candidates, what I'm looking for. But I thought this would be just a good preview or precursor to go over some of these. My first rule trading, if you've been here, you've been here, so you know it's protect capital, but that governs every decision we make. We are much more likely on a average basis when presented with 10 trades, we're much more likely to not take more of them than the ones that we actually do take. And so the ones that we end up getting into, it's because we have probabilities in our favor. Let me speak about probabilities. I use two different types of probabilities. Okay. Number one, I use mathematical probabilities, simple standard deviation, reversion to the mean, statistical probability, and then a theoretical calculator, math. But there's another type of probability concept that I talk about, and that's this. Imagine you have a scale, but it's an old fashioned scale, which has a dish on each side. So whenever I look at a trade or an investment or anything, I will put on one hand or in one on the left hand side the negatives, on the right hand side the positives. Okay. And even if the math works, the other probability, right? And that looks good, I still have that broader weighing that I'm doing of probabilities. What would be, let's say that you're investing in XYZ or trading XYZ company, but it's the only one going up in its sector. Well, that's a negative. So at the end of the day, or at the end of every trade analysis, I'm looking at the sum of all the possible data points that are affecting the stock price at that moment. Two different types of probabilities. Protecting capital means we respect stops. It's hard to do sometimes. I get it. If you don't respect your stops, then the results will deviate. Protecting capital also means scaling your winners. What does that mean? If you own, you have a $2,000 investment, you're up 50%. You sell half your position. You're always locking in gains because what investors do is they straight line extrapolate off the most recent or the loudest or a most emotionally rewarding data point. So if that happens to mean that it's the stock, they think the stock's going to go up, they will straight line extrapolate the stock going up. That's unrealistic, obviously. So we scale our winners because stocks don't go up straight up. What's the goal of trading? Obviously, to make a lot of money. When people say that, my question is, well, how much money do you want to make? How much time are we talking? What's the risk? What's the probability? People do more planning for trips than they do that they're going to trade. People, I think, well, I can sit down on my computer. I paid for these subscriptions. I got all these great tools, so I could do this. I mean, that's a little bit naive. Yes. My goal is I want to make the most amount of money in the least amount of time with the least amount of risk. And I added a sentence, which is the least amount of effort. The way we trade, the way I trade, hour and a half in the morning, maybe an hour at night. Successful traders rarely sit in front of their screens all day. It's mentally exhausting. The way I trade is really meant to keep you out of the market, to find the high probability setups and then take profits when you win and respect your stops when you don't. Through trading methods, you all know these. There's the story method, right? We don't do that. Although we have to pay attention to the story because in that broader weighing of probabilities, if the story's bad, like the buzz around the company's bad and you're looking to go long on a breakout, well, that's a negative. It has to go in the left-hand side of the scale. Story versus price. I use price because price is the absolute best, the best representation at the very current moment of all available information out there, public and non-public, truth and lies, made up shit. Price also removes FOMO. It removes bias. I mean, you're not going to argue about it if a stock's at $7.62. It's at 7.62. Is high probability based upon the fact that the machines are based off of math, which is price, and you can absolutely define risk. Whereas story opens you up to all those bad habits. Okay, so price is the best representation of all available news, analysis, and opinions at the present moment. Price is the only data point you can use if you want to trade with probabilities. Price is what the big boy traders use, ultimately. Now they'll create their own systems and models, but at the core of it is price. Price removes FOMO, revenge trading, and bias. Never, do not marry a stock, just date it. So my methodology is identify high probability areas where price has the best chance of a momentum burst. We're going to go over that today. I identify where bots and algos are most likely to trade. Why? 80% on average of the daily volume in the market is bots and algo driven. I have a defined risk or stop before I get in. I have a defined target, a defined time frame, and it's not that hard to learn. I use this analogy. Here's how most people trade slash invest. They go to a train station, they pick a train, they hope it's going in their direction, they hope it will leave and arrive at their destination on time when they want to get there. They hope it has enough fuel. They hope the track is in good condition. They hope there's not too many stops, but that's how most people invest. And the reason they jumped on a train is because a buddy told them it's a really good train. Here's how we invest. We wait for the train to leave the station. So we wait for price confirmation. We already know the direction it's going in, up or down. We already also know if there's anything ahead. So other price resistance or support levels. We also know that anything could affect that train, that price movement. So, is there news coming up? That's about the depth that we go. Finally, charting concepts. I ignore the candle color. It does not matter to me, and I'm going to teach you how I read a candle. I largely ignore a candle shape 90% of the time, unless there's specific patterns that I will use. When I talk about a candle that's a Japanese candlestick, I'm using the full range, not the open and the close. So always remember, whenever I look at a candle, it's the full range. Yes, candle range is the most important. And the three candle rule, which I'll go over, is something that is fairly consistent throughout my methodology. So, first thing I want you to notice, this is a 5 minute chart. The first thing I want you to notice is how plain it looks. I don't have a lot of indicators, lines drawn everywhere, because all of these indicators that I use, all four of them, are all derivatives of price. So we opened a trade in OSS today. Why did we do that? Well, first, let's take off the studies, because first thing when I open my charts, universal rule that governs how I read charts, I read them backwards. The reason why I read them backwards is I don't particularly care what happened here unless I have to. But I do know that if I go that far back, no matter what it's doing today, it's going to leave me with bias. I don't want to have any bias. That's why I start small. I always start with the current candle also. I use the daily chart. We have a hard fast rule. It's a 3 day stop. If we don't scale for a minimum amount, 25 to 35% within 3 days, we close a trade. Only the ones that we scale for, meaning selling half of our position for profit, do we then continue to hold longer. We have very short hold times. All right, so what do? It's really simple. First thing is on Thinkorswim, I go to drawing tools and I click this one. You could do this on any platform. So what I'm looking for are areas where price tried to go higher and failed. And I'm looking for areas where price tried to go lower and failed. That's it. Why would I do that? Well, let's look at it this way. If I'm right that when bots and algos get to this line, there will be another battle. Why? Because there previously was a battle there, a defined winner and loser. In the middle of all this, they're just working it out. If I were to go long here on a breakout, I'm going to have to deal with this battle too. Might as well wait for this one to be done and let the market expend its energy. So let's pretend that'd be the first place to the top side. Now I go use today's candle and I'm looking for where did price go and stop? Well, right here, right? See how it pushed lower? But I have this one, then this one, then this one. So I'm going to choose the furthest one down, because if this breaks, where's my next area where price tried to go down and failed? Right here. What I am not saying is, well, if you break that, it's going to just straight go through. No, not at all. I think they'll probably get tested here at the 50% of this candle. What I am saying is we trade momentum. So what I'm looking for are price levels where I have a high probability for volume to come in. Well, if 80% of the volume in the market is bots and algos, that's what I want to pay attention to. So I'm putting that probability in my favor. The trade math probability is simply, will this go far enough in 3 days in order for this trade to pay me enough for the options I choose? Okay. But we're just talking about levels today. This is what this just did for me. I don't have to look at this stock now until or unless it breaks. What didn't I do? I didn't get involved in whether or not I think it's going to break out here or down here. It's in the middle. I mean, we were literally trading to the middle of it. So, couple things on 52-week or all-time highs. The first test, the first one. There is a 90% chance the price will go 10% higher in the next week. So we like those breaks. A couple things about going short. Don't don't short the market. Literally. We very rarely take shorts, and I don't know if we make money in them. Don't short the market. The market always has, or in normal market environments, and this market certainly has an invisible hand of monetary supply going into it. Don't short the market. But if you are going to short the market, then look at a price chart and simply find these levels. Then what you do is you create an alert. There. Now I don't have to watch it. Now I'm in this trade already. So let me show you how we read it, how I read a candle. So you look at this, you go, ah, it's a green day. That's good. Nope, don't care. Ah, the close was above the open. So the way the Japanese candlesticks, a green one will have the open is the body, the lower part of the body. The close is the upper part of the body. The high of the day, intraday, is the wick, and the low of the day intraday is the bottom wick. Okay. And some days have no wicks. Very strong day. But just because it's green and just because price opened above or closed above where it opened, to me, that's not this candle. When I look at it, this is not a good day. Why? I simply look at the full range of the candle and where do we close? Just like the 50-yard line on this candle, the middle, we close below it. I think the Bears won today. These are a lot easier to see, right? Bears, Bears. Okay, but this one here's can be confusing. I would say the Bulls won on this one and on this one. Now, what do you do with that information? Well, you have an understanding if the rest of the market was up and this is what this candle did today, you may want to pay attention to that. I don't expect traders to all of a sudden remember all the shit that I've been talking about. It's very difficult. It takes practice. You know, trading is a lot like, and you all have heard this, but baseball, right? You got to build muscle memory. First, you got to figure out and make the decision that I'm not going to do what I've been doing because it hasn't been working. If you're in that position, or what I am doing works, I want to take it to the next level and see if I can expand upon my success. Great. Then you have to define what skills you need to do that and be realistic. Then you got to practice them, learn them, then practice them. And then you got to get up to the plate and start swinging at the ball. One of the key factors to the way I trade are the sheer number of trades. Last year, I believe I took 220 trades. And that was not trading for the first 3 months of 2025. Because what those sheer number of trades do, it increases my statistical probability will remain, or my performance will be more closely correlated to my historical performance because of the number of trades. So having said that, if you're looking to learn how to trade, I can teach you. But if all you want to do is learn support and resistance levels, I'm like, that's great. What are you going to do with it? I could teach this, but what are you going to do with it? First thing I would do with it is this. You get a tip. You read a thing on Twitter and you go, oh, I think this OSS is like, it's going to be the best thing since sliced bread. That's part of the story, I bet. But okay, you look at, if you have these levels drawn, let's remove this one. Why would you buy it right now? Oh, well, it looks like it's going to go up. Okay. Well, we have a setup for that, and that's why we got long, by the way, yesterday. No, we got long today. Yeah, that's why we got long today because of the setup we used. Why would you say it's going to go up? This is valid. You got 3 days of higher highs and higher lows. But if you're not in this trade, why not wait till it gets up here and breaks? You have much better odds up here because most traders hate the perceived wins that they will leave on the table. It is a much higher probability I can tell you prices can break out of this channel it's in up here than here. And what if I were to tell you that no matter what battle zone you draw, once you figure this out, when price enters the battle zone, bots and algos, they want to go to the middle. And then they're going to keep retesting each side until one of them breaks. Legit. It happens all the time. And it happens across time frames. When I do my trade entries in the morning, those of you who've been in the morning session, I use the 5 minute chart, but it's the same concept. Battle lines, battle zones. Okay. So my point on this is why would you go in this trade right now? It hasn't defined anything. If you're not in the trade, you'll wait. Another concept I teach is we do not chase. See this? Higher highs, 3 of them, higher lows, 3 of them. That's a trend. So 3 candle minimum for price to be in a trend. Number one. Number two, we won't enter a trade if we don't have at least 2 candles, however far apart, that look like this. We want at least 2 tests to one of these battle lines, meaning we can't chase. If I wasn't in this trade, I couldn't get in this trade now. I would be chasing. All of these rules, or not all of the last couple of rules, if you listen to them, they're all about staying out of a trade. Let's take a look at meta today. The first thing we see is a gap, right? So anytime you have a gap, you put an alert at the top and the bottom of that gap because they're going to test the top and the bottom. And if it breaks, might be a good trade. Yes? Gap fills are great trades. So this is a more specialized trade, gaps. Now, if you're sitting there like, well, how the hell am I supposed to find that shit? Well, you can use FinViz or Thinkorswim has these. Here we go. Gap ups. So these are all the stocks that gapped up today. And you could literally go through them and just set alerts. There is not a symbol that I pull up that I do not put an alert on for the stocks. And what I would say to you is if you really do want to practice this and learn this, all you do is you come in, as I showed you, not how to draw your horizontal line. Okay. And we'll do a couple more, how to set your alert. But if you come up here and you go, take screenshot, share that in the boardroom, ask somebody's opinion, or offer your opinion on a stock, just the numbers. I think support is here and resistance is here. And okay. And then get opinion on it. That's why we have the community. That's what we're looking to learn. Let's see here. Oh, let's look at this one. Oh, no, that's not a good one. Oh, who won today? Stocks up 16 cents. Pretty easy to see. The Bears won that one. That's not a good candle. Let's look at the SPY today. The SPY was quite strong. That's day number 3 of higher high and higher low. Would you agree that this candle here is where price went up and failed? Yep. Then we go to this one. Yep. And to this one. So when I talk about knowing what the track ahead looks like, that's what I'm talking about. I'm always putting these levels in because I want to know where price could happen to stop for both the top side and the downside. I will then, after I have my support levels and resistance levels drawn, I will then take a look at the overall chart. But even then, I'm not going that far back. I use primarily the daily chart because our option contracts are typically 60 days or less, 2 months. Okay. I have a rule. There's 2 rules that will help guide you. The first rule is whatever your time frame you think up in your head for a trade or investment is, first of all, if you don't have one, you shouldn't be risking any capital. Seriously. If your investment is, well, I like the company, I think it's going to go up, then you need to be writing cover calls, get paid while you hold it because time is risk. Okay. That's something I strongly, strongly believe in. Talking about stocks here, if you own the stocks, but whatever your time frame is, double it, and that's what we use. If we think something's going to happen in 3 months, we just automatically go out to 6 months. So the majority of our trades are very short term because obviously we're buying, 45-day contracts. When I go beyond 90 days, I'm going to the weekly. I use the weekly only if it's 90 days or more. I use the daily. My indicators are very, very simple. Very briefly, I use a 45-day standard deviation channel. I use the 50-day moving average and the 200. I use the MACD histogram, but I use it in a specific way. And then relative volume is specific for trades that we look at. Meaning, there's no use in me telling you what those are because they're not going to make a lot of sense to you. You have to understand the whole thing. All right, so we tried to get NVIDIA today. Why? Because of this candle. See how it made a low and it made a low right at the 200 day? So that means if I go long here, I'm bouncing off the 200 and they're going to want to take it to the mean. Who's they? The bots and algos. Price always overshoots the mean. It goes back and forth, right? But these standard deviation levels, -1, -1, -2, +1, +2, stocks will have a personality for 30, 60 days. And that's what this picks up on. Okay. So we look to get long here. Now, it failed. It got rejected. Well, actually, we never got in the trade. So we didn't get in the trade. And now the trade is different. Now I need a break of this candle. Why? Look, I count back from today's candle. Where did price try to go up and fail? Well, right here. Okay. So that's where I'm going to look to get long on a break of that. Now it's a different setup. It's no longer a reversal. Now it's going to turn into a breakout. And once I get a third candle, and if that thing goes sideways, I will then be able to say the trend is sideways. We're in consolidation. But it makes it a lot easier to discern what trend price action is in if you're using 3 candles and you read the chart backwards. I always forget that reading charts backwards is one of the weirdest things I do. It's what I do and it's what I teach. All right. Do I have any questions? Did I make sense? Do I need to go over anything again? Do you have stocks you want me to look at?
Hey, Ross, could you take a look at Team, TEAM,
Hey, buddy.
especially like on a 3-month daily? Yeah, because I was noticing, see how it closed that gap that I had from a few weeks ago. It closed the gap. It looks like it started to bounce, a bounce and go here the last few days, but then it just kind of like
Petered out.
buttered out.
I would say a week prior, you had concerted selling for rebalancing. I think there's going to be, I think a lot of charts are going to look like this. They could be choppy until they make the final break.
Okay, so it could just be one of those chopping. It's just kind of indecisive until it actually picks up.
Look, here's PCT. Look what it's doing.
Oh wow, that looks
very
similar.
Similar, right? Look at NVIDIA, choppy. Nasdaq, choppy. See how choppy it is? No
Yeah,
clear.
it looks like it just like it was going to put in a good LCD, and then it just sort of petered out. Like, gave up on it.
Yeah, so that's what I would say. I mean, even if you look at EOSE, it's not like, I mean, we got late day selling came in on it, but it's going to continue to drift down. But this one at least has more trend to it than Team did, I would say. So where would your get long be?
Oh God, I can't remember where I've got the alert set. I think
It'd be there.
I'm looking at yours.
You're more aggressive.
Yeah, that white. Yeah, right where that white line is you've got there.
Yeah, 50 day.
See it.
That answer your question, bud?
Yeah, it did. Yeah, because I was just looking at it and then I was kind of like, WTF, Becky? Why is it doing this? Because those last 5 days are just kind of like.
Ross, would you mind looking at strategy and setting where you would go long and where you would go short?
So I would go long never, but I really would never go long. It's on the list with Abercrombie, but let me get rid of my studies, okay? And let's just do this blank. All right, here we go. Where would I go long? So what do I teach? Start with today's candle. Go to the top. After that, where's the first place where price went up and failed? I would say right here. Would you say that, Jamie?
Yes. Yep.
Yep. And where's your first speed bump? Meaning, where's the next place where price went up and failed? Well, I'd say right there.
Yep.
So, break of this, price will drive to the middle. Why? Bots and algos love reversion to the mean, folks. If you pay attention, if you come to the Tuesdays, you'll see it where we will call out a price and it will tag it, sometimes on the penny. Why? A lot of times has to do with the mean or a level we've drawn. Okay. So that's where I'm looking long. Now you could be aggressive long, Jamie, if this goes sideways some more, right here below 100, or right?
Yeah. I'm more
Okay.
inclined to think it was as a short. What would you wait for 81.81?
Oh yeah, absolutely. And the 90% on the rule for 52-week and all-time highs, where it's a 90% chance to go 10% higher, does not work the same for shorts.
Okay. Super duper. Thank you, boss.
Hey, just so you know, on when these push like this, here it happened in each of these cases. The first break is the false break. See
What does
how they
that mean?
kept testing? Well, look at here. Like here, oftentimes that first breakthrough, I'm talking about at the highs and the lows, will be the false break, meaning it will bounce and then drive through it. At the end of the day, he may like this entry and he may get the price confirmation, but what he's taught is to again use math. He's gonna we have it on the site where you estimate how much will this stock move in the next 3 days, given its IV, okay, given its price and the time frame of 3 days. And if it moves that much, how much will the associated options I am buying move? And if that math simply doesn't work, and then if he does his loss side, okay, I'm going to set my stop right here. And if I'm going short, maybe the stop is too large. Maybe we don't have the minimum R factor that we demand, which is 2R, means we want to make twice as much as what we could lose. Hypothetically, again, it's set by math, not by pulling out of my rear end or some blue sky. Even though he likes the setup, even though he may get price confirmation, he's still going to go to the math. And if the math says don't go, you don't go. What else you guys got? Questions?
Hims, go boss.
Boner drug.
Another one, if you got time, boss. Maybe I know we've got at least one new member in here. Zeden. You can say hi if you want to. There,
Oh,
Zeden.
hey Zayden, how you doing,
Um,
sir?
but maybe just go over the basic setup of a LCD, the low closed
Sure,
doji, and a HCD, the high closed doji, and just kind of boom,
you bet.
how it works. Yeah.
I can do that. Let's throw some studies on here because I just got done saying go to the top of the candle. Look, what did I do? I immediately saw a breakout. Why? Because what do I have here? This attempt up that failed. And then I had subsequent ones too that weren't able to get up there and failed, right? So this is a break level. Strong day relative to the market also. Then what am I going to do? I'm going to go to the news and go, were there headlines today? Yes. Stock surges is analyzed. So why is that important to me? Well, I don't want to misinterpret the strength of the stock now that I know the reason. So I like that for a breakout. I like that the MACD, the momentum of this move up is very small. Yeah, I mean, this was a good, nice consolidation period. What's a good consolidation period, people? The longer, the better. How many do we need for a minimum? Two. Remember, I said two. So 2 days. I assume you're looking long, Lotto, right?
Yeah, absolutely.
Okay. Let me pull up some low close dojis here, even the ones we got smoked on today. All right, so check this one out. PCT. This is a low close doji. The reversals. So the first thing you look for is I don't care what the shape of the candle is, but what I want to see is a push to the bottom after 3 candle downtrend. I got a 3 candle here. Okay. After a 3 candle downtrend, a push to the bottom, and then within 2 days, 1, 2 trading days of that bottom, that low close doji bottom, I need a close above the doji candle high. Let me say that again. The candle that makes the bottom is the low close doji. I then have 2 days to confirm a reversal with a close above the bottoming candle or the low close doji candle high. Trigger candle, confirmation. We got the confirmation yesterday. So we went in the trade. This one made the low. This was the confirmation candle. We went in this morning. We were doing quite well throughout the day until this shit happened. Right here at the end of the day, it fell off a freaking cliff. Do I think that's organic? Hell no. No. That's a low close doji. Okay. Now, a couple rules. The closer to a 45-degree angle, the better. Another rule, wherever the downtrend started, so it started here, that's your expected move up on any low close doji. Now, it doesn't mean it's going to be a straight shot, but sometimes it is, very oddly enough. How we set our stops, super easy on a low close doji. Whatever candle's the confirmation candle, we set our stop. We have 3 choices, but I'll share with you the first choice is the other side of the candle. What are we doing? Well, if we get in here, we're saying, hey, on the day before, there was a defined winner here. Therefore, in order to take me out of this trade, you got to get below the defined winner. Now, not every trade ends up with that stop, but that's one of the ways we do stops. Okay. So my expectation of this trade is this go all the way up to $9. That's what the momentum was telling me. Why does this happen? Okay. This one, you had all this choppiness and then you had some selling. And the bots and algos get used to that. And they get in a rhythm and they measure it. And then you have a reversal. Catches them off guard. You can actually create a very short-term gamma squeeze with a low close doji. Why 2 days? Well, because remember I have a 3 candle rule. So if I were to wait 3 candles, for this to close above this, after 2 candles of it not doing that, I'm in consolidation, right? 1, 2, 3. If this went sideways, so it's no longer valid for a true reversal because force would have gone sideways, financial force, directionally. That's a low close doji. And the opposite is at the top, a high close doji. I like this level where it's bouncing at because it's the original gap fill break level. You see it? So I like that. I do like the fact that it's a negative SD level, not a positive one. So I could have in my favor a reversion to the mean play. Yep, I got that. I like that. I like that I have declining MACD, which means the selling pressure is going down. I don't think I want to be going long if this is going up. Okay, so I like that. All these data points I'm throwing in the right-hand side of that imaginary scale saying, these are good things. But you notice how the indicators, none of them are my go or no-go decision maker, okay? It's math. It's the calculations that we do. They tell us whether or not we should do the trade. If you don't have a defined risk and you don't have a defined profit, expected profit, and a defined holding time, you are guessing and gambling. And why would you do that? Nike. I'll tell you right now, look at the bouncing off the +2 or the -2 here, just reported earnings. In the middle, it's in the middle, right at the mean, right? And you have the 50-day above it, which is a major speed bump. There'll be a battle there. Bots and algos love the 50 and the 200-day. Jimmy, I'm going to wait till the 47.63 breaks. So this is where I'd switch to the weekly chart and go, well, what happens if that 40 breaks? Oh my gosh, you go to freaking oblivion. It hasn't been down this low 2014. There's long-term holding of stock right there. That's 11, 12 years of holding and you're at a loss. Why? Because everyone says I'll sell when it gets up here and nobody does. Nobody. They round trip it, right? Now, here's how this works now. Now, as they watch this go lower, they're going to be saying the same thing. Well, I got the 179 once. I'll just wait for it to do it again. Okay. Well, that only took 6 years if you're lucky. I'm going to tell you, I don't think you're going to be lucky. Totally different business environment. Pre-COVID, too. Doesn't mean I'm a retail expert. I don't need to be a retail expert, but I do know it was pre-COVID and it's a different It's a different environment. And price obviously is voting, regardless what the story is. Do you want to go long Nike for a long period of time here? Hell no. Other questions?
Boss, could you look at IGV software index?
Yeah, the thing reversed today. So ServiceNow is ripping. It's sort of a mess. Yeah.
Yeah, it is, especially with the 200-day sitting up there.
Price could continue to go up here in a straight line. Sure. It's IGV, the software ETF. But it's more likely that there's going to be some choppiness. So at some point, there's going to be a new price discovery level that will print for us to get long off of. Okay. And now it's stuck between the 200-day and the 50-day. One of those is going to give. That would be your level, is the break of the 200.
Yep, my
But
thoughts too,
it's,
boss. Yeah.
yeah, I like that. Any other charts? Zayden, whatever you know about investing, whatever you know about trading, what we do here is learn to read charts and then apply mathematics to them. And they tell us the probability, generally speaking, of whether we're going to make money or not. We, on average, a good manager, well, the stock market since 1929 has returned about 12% a year. Okay. And people are they love that. Whereas on average, I average over 70% a year. How do I do that? If I'm in the market less, I do less work. I was a professional, I had clients. How do I do that? This is the way I did it. And so that's what this Discord is about. And this is what we do here. And I was telling somebody the other day that they'd asked about numbers. And I said, well, to be quite honest, I think we've kicked out over 1,200 people from the Discord, not because they didn't know enough or anything like that. It was just because they were a-holes. We want people who are excited to learn and not a-holes. That's it. Offer an idea here and there. And so for you, ask a lot of questions if you have them.
Okay, thank you.
You
I was
bet.
just, I don't know. I'm not really sure like completely what I'm looking at. This is like the first time I've ever seen a chart, so I'm like, it looks like a cockpit to me. So,
Yeah.
but
Well, it's a pattern recognition, but if you, it's like any other chart you would do. It represents obviously a collection of data, and what I teach is why that data is occurring at that level and how to profit off of it with the least amount of risk and time. So, yes, sir,
yeah,
Brave Mongoose.
Can you look at CNC?
Mhm.
Charlie, November, Charlie.
Breakout. This was the break level, right? Right here. I tried it. I like these. Now I want to find out why it was up today. Because if I deem it to be a one-time event, no, I see nothing. Wasn't news, it wasn't a contract or any of that. So what the first thing I'm going to do is I'm going to go back to the weekly now and I'm going to check. Hey, when was the last time this stinking price was up here? Here it is. 2/3/2025. All right, let's remember that date, people. Then I'm going to go to the daily. Whoops. On 2/23/2025. There we are. Last time it was up here was here. Oh, that's not it. Here we go. There's my line, 223. At a tip above that. There we go. What am I looking for? I'm looking for the next level where price went up and failed. There it is. If I get long here, I don't expect any speed bumps. There's no other battle lines now until this. That's, for the way we trade, we only need a 3% move. We're not looking at, oh, we got to have these 10 and 20% moves. Imagine that with a stock. You can't profit off of a 3% move. Guess how often stocks have 3% moves in 3 days? A lot more than they have 50% moves in a day. When you're buying a stock, what are you waiting for? Well, you're waiting for those 50% moves. Not a day, but you get what I'm saying. Then I check, analyze. What do you do? Medicaid. You heard my voice drop, but it's not a negative. Just because I don't like the business, just because I think it's populated with fraud and whatever. Okay, whatever. It's a public company too, by the way. It's public accounting scrutiny they go through on an annualized basis. You got to have an accounting firm in cahoots with you too. So I like this. I like this pattern. I like the fact that it's what's been doing. Look at this. Last 45 days, it's just been riding this mean. I like that it's not overbought. MACD is red. We often get into trades before red, selling momentum, before it flips to the green side. That happens a lot with our trade. 60 days out, I'm going to August. I'm going to, let's try this. How about we analyze this trade, bud? You got a second? All right, breakout. Put the contract in. It'll fill the option price. Let's go back. The break level was this high. So down there, the high is 66.52. Okay, the stop price, today's low is 65. So we'll go 64.99. When I have the room, I like to round down below whole numbers to end in a 9. My stop choice is my first one. What this just did for me is it calculated a 1 standard deviation move over the next 3 days of the underlying stock. It calculated where I set my stop. If the stock goes there, how much would I lose? Then it assigned the correct option contract. Then it computed how much would it go up or go down. I like that trade. We're going to submit it for tomorrow. Yeah, I'll look at that trade tonight among the other candidates. But that's the whole process right there, right? We went from the charting. After we found, okay, this was a break level today. Where's the next speed bump? We had to go way back there. So we found the next speed bump. Okay. Notice what we didn't do. I didn't sit here and get in this big ass dialogue why price did all this shit. Because you know what? I don't care. You know why? I'm only expecting to be in the trade 3 days at a max if it doesn't work out. So it's highly unlikely whatever happened in here is going to affect me. I still check the headline. That's it. Then we took it straight to the calculator. Now, if you don't have a calculator, if you Google or YouTube, you can go here, Think or Swim, how to do a theoretical price calculation. It's not that hard, or I can do a session on it. That's the entire step through process. So it's very mechanical. Why? Because I'm horrible when it comes to emotional trading. All right. I have this recorded. Thanks for hanging out. And I'll get this recording out this weekend to you all. Have a good day, people.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying.